My name is Jake, welcome to the channel. In today's video, we're gonna cover an under the radar dividend stock that not a lot of people talk about and is really misunderstood for the most part. This stock that we're gonna talk about has a starting yield of 7.5%. 7.5% is well above the market average. Right now, if you were just to invest in the S&P 500, you would get under a 2% starting dividend yield. Yes, that yield would be growing exponentially faster than the stock that we're going to talk about today, but depending on your time horizon, if you're looking to live off the dividend within the next 5, maybe 10 years, this is a company that you're definitely going to want to check out. The company that we're going to be talking about today is not in my cash flow portfolio, but is actually in my real estate portfolio. And the company that we're going to be talking about today is in the healthcare sector. This is a healthcare REIT. And the company that we're going to be talking about today is OHI, Omega Healthcare Investors. If you've been following my channel these last couple of weeks, I've talked a lot about real estate investment trusts. The reason why I'm talking a lot about these is I find there's more value in the market today in investing into real estate investment trusts than in the traditional market, like in Coca-Cola or in Johnson & Johnson. I just personally find there's a lot more value to be had in the real estate market at the current time. And investing into REITs is a great way to get exposure into real estate without having to take on all the risk and all the upfront capital which it would take to invest into physical real estate. Now, if you're not so sure exactly what a real estate investment trust is, I would recommend that you check out this video right here. In this video, I talk about what a real estate investment trust is and break down the key parts of investing into REIT. If you're not sure about how REITs are taxed, I would recommend checking out this video. In this video, I talk about how REITs are taxed and what that means for your average investor. In today's video, we're going to cover 3 topics. The first topic that we're going to talk about is what has been the historical performance of REITs over time. And so we're going to do a little bit of benchmarking and see how REITs have compared to the broader market. And then second, we're going to take a deep dive into Omega Healthcare. What we're going to do is we're going to take a look at the dividend metrics, everything related to the dividend. We're going to take a look at how OHI has been taxed over the last couple of years. Then we're going to take a look at OHI's or Omega Healthcare's portfolio. We're going to look at the different types of assets that they're invested in, where they're diversified, where they have their physical structures, and really dive into the details of Omega Healthcare. And then lastly, we're going to compare investing into Omega Healthcare to the S&P 500. The company that we're talking about today is a company that you can rely on for the dividend income. This 7.5% dividend is here to stay, and it's only going to continue to grow. When I first heard that AT&T's management was going to be cutting their dividend in half, it kind of made me feel a little like this.
I don't know. I do not believe in love.
Oh my gosh, Big Ed, I love it. All right, so let's take a look at the historical performance of REITs compared to the broader stock market. A lot of new investors don't find investing into real estate nearly as sexy as investing into Snapchat, Microsoft, Facebook, whatever. But I think it's important to understand the historical performance when benchmarking real estate to the broader stock market. So what this chart is showing over a 1 to a 40-year time period, the historical performance of equity REITs compared to, for example, the Russell 1000. The Russell 1000 is similar to the S&P 500. Instead of 500 companies, it includes 1,000 companies, but it incorporates that top 500 with an additional 500 companies on top. So you're getting a little bit more broad exposure to the stock market when we're comparing the two. So what I'm noticing from this chart is less than 15 years, the broader stock market has outperformed real estate. But if you look at 20 years and beyond, real estate really starts to shine with an average of about a 10 to 11% annual rate of return. If we look at the entire REIT equity sector as a whole, in 2020, the entire sector was down about 5%. But when looking at 2021 year to date, here at the end of May, we're up 18% for the sector as a whole. But if we dive into the individual sectors themselves, for example, if you look at healthcare here, in 2020, healthcare got hit pretty bad. It didn't get nearly as hit as bad as other sectors, but it also didn't perform as well as some sectors. For example, data centers was up 21% in 2020. So all the sectors in the real estate market, they perform differently depending on the sector that they're in. So just like investing into the stock market, there's different areas in real estate that are more volatile than others. Now let's take a deep dive into investing into Omega Healthcare and what are the numbers around the dividend metrics. A number that I really like to take a look at is if you were to dollar cost average into Omega Healthcare over the last 4 years, you would have an average dividend yield of over 8%. Over 8%. This is a really, really strong dividend yield. With Omega Healthcare currently yielding 7.5%, it's slightly under the 4-year average. So it's a little bit pricier than it would have been over the last 4 years on average. So for example, if you were to invest back in the summer of last year, you'd have just under a 9% dividend yield. If you were to invest before the pandemic, you'd be getting about a 6.5% dividend yield. In my personal opinion, anything over a 7% starting yield for Omega Healthcare is a good value. But obviously this is just my opinion. Now, when looking at the dividend growth rate of Omega Healthcare, it really varies depending on the time frame that we're looking at. If we look at the 10-year CAGR, so CAGR stands for compounding annual growth rate, but this is just the dividend. This is not the share price. So very, very important. If we look at the 10-year, it has over a 6.5% growth rate, but if we look at 3 years, it's less than 1%. So it really depends on how long you've been invested into Omega Healthcare. And as we saw earlier, the performance of REITs or real estate, it's a long-term investment. It's not something that you're going to see spike traditionally, 50%, 70% in 1 year. It happens in some sectors of real estate, but in the healthcare sector, it's not very common. Omega Healthcare is a future dividend aristocrat. But if you do your research online and you research different stocks, a lot of the information can be conflicting and can represent different information on different websites. So let me explain a little bit. So if you do all of your research on Seeking Alpha, and if you were to research Omega Healthcare and you're looking at, okay, I want to only invest into companies that have the status of dividend aristocrat. A dividend aristocrat is a company that has paid a dividend, an increasing dividend for 25 consecutive years. A lot of dividend investors are solely looking at dividend aristocrats, and they a lot of times won't even consider other companies that don't have this status. I personally don't follow that approach, but I can understand why some dividend investors would follow that approach. Now, if we look at Seeking Alpha's information around the dividend growth and we expand it here, we can see, okay, they've been paying a good dividend, it's been increasing, but well, it looks like they had a dividend cut in 2015. And if you go down here and you see, okay, all right, well, what was the issue here? Back in 2015, well, they paid a dividend, but actually they paid more. And so you start scratching your head, well, actually, no, they didn't have a dividend cut in 2015. And so if you're a new investor and you just look at this and you're like, well, nope, not going to invest in Omega Healthcare because Seeking Alpha said they only had 5 years of growth. This is where a lot of sites get it wrong when it comes to real estate investment trusts. If we go over to dividend.com and we take a look at Omega Healthcare there, we can see, okay, consecutive years of dividend increases. 1 year. Well, this is not a dividend aristocrat. They've only increased their dividend for 1 year. But actually, this is incorrect. This is wrong. The website has it incorrect. So if you just go over here and you take a look at just one site and you see, okay, well, they haven't increased it for 2021 yet, so that means they haven't increased it and therefore they don't track the dividend increases over time. It's really funky how some websites track this. But if you look back here at 2015, you can see, okay, they had a different dividend or a different payout of 18 cents per share. And it can look a little bit weird on different websites. Now let's take a look at one more site just to make a point. If you go to this website here at Street Insider and you look at their dividend history and you go down to 2015, it looks like they only had 3 payments in 2015, but this is absolutely incorrect. And so if you're a dividend investor and you're using a dividend screener, you are overlooking Omega Healthcare. Omega Healthcare is not on a lot of dividend investors' radar because the information is not being portrayed correctly on a lot of these websites. If you want to find accurate information around the dividend, if you go to Omega Healthcare's website and you go into the dividend section, you can clearly see that in 2015, They clearly did not cut their dividend, but they paid actually an increasing dividend in 2015. This can be a little bit confusing because it's labeled a little bit different, but this is still a dividend that the company paid, and it still represents a dividend increase. Now let's take a look at how your dividends would be taxed if you invested into Omega Healthcare. In 2019, 66% of the dividend would be taxed at ordinary income. This is traditionally your highest rate. It'd be comparable to, your 9-to-5 job. And 22% was taxed as return of capital. If you're not sure what return of capital is, I'd recommend you check my last video that I shared last week. In 2020, 73% was considered ordinary income and 24% was considered return of capital. So this is not the worst company to hold in a taxable account because 24% or about a quarter is return of capital, which is a little bit more favorable if you never sell your shares. But as always, it's always easier to hold a REIT in a tax sheltered account like a Roth IRA. So what does Omega Healthcare actually do? What do they own? What do they specialize in? Omega Healthcare is a triple net REIT. So if you're not familiar with triple net, I would recommend you watch that other video because triple net is so important. If you've been following my channel, you've been watching my last couple of videos, you've heard me talk a lot about triple net. Omega Healthcare focuses on two segments. They focus on skilled nursing facilities and assisted living facilities. They have operations here primarily in the United States, but also in the United Kingdom as well. Though Omega Healthcare is also involved in assisted living or senior housing, really their bread and butter is in skilled nursing facilities. This is really what they specialize in. One of the biggest highlights of Omega Healthcare is despite being in the healthcare sector during a global pandemic, is they've been able to collect over 99% of their contractual rent and mortgage payments throughout the entirety of 2020 and so far into 2021. This is absolutely incredible. Now let's take a look at Omega Healthcare's portfolio. They currently have 70 operators. They have 954 facilities. They're in 42 states and in one foreign country in the United Kingdom. The majority of their facilities are in Florida and in Texas. As we know, the majority of retirees, they love flocking to Florida. They love going to where it's warm. In Florida, they have 134 facilities, and in Texas, they have 118 facilities. In the United Kingdom, they have 55 facilities. So if we look at their 2020 annual report and we look at the percentage of their gross real estate investment and where it's located, over 14% is located in Florida, just under 9% in Texas. They have a little over 4.5% in the United Kingdom, and then in the remaining states, they have over 33%. So they're very well diversified. I personally really like that there's more exposure to the southern states and the warmer states here in the United States. As we see net migration out of the northern states into the southern states, I see this as a positive trend for Omega Healthcare. And especially as we know here in the United States, from a regulatory standpoint, every state manages their state differently, and some states are more favorable for REITs and some are less favorable, especially when it comes to the healthcare sector as a whole. Now, when I think about senior housing or senior living facilities, I don't generally think of top-of-the-line modern buildings. It's just not something that generally comes to my mind. But Omega Healthcare just recently completed the construction of a senior living facility in New York City. It looks amazing. This is not really what I would have expected from a skilled nursing facility. This is somewhere where I would actually really like to go. Now, before we wrap it up here, I want to share a few slides from the investor presentation here from June of this year that the management team at Omega Healthcare shared to investors. What's obviously on everybody's mind is how these healthcare facilities are being impacted by the pandemic. And they're very transparent that recently 2 operators, about 3% of their estimated contractual rent for Q3, have approached them about their inability or their capacity for future rents. Though this is a blow, it's not going to be detrimental and it's not going to impact Omega Healthcare's ability to pay out their dividend to shareholders. I think this slide really represents why I love Omega Healthcare so much. It is an income stock where you're getting over a 7% starting yield, but on the one side, it is a value stock. It doesn't trade at high valuations. It has a very low adjusted funds for operation. This is like, for example, your price to earnings, how valuable or how pricey the stock is. It trades at very fair values, but also on the other side, it's a growth stock. It's grown at over 8% year over year. As a dividend growth investor, this is exactly what I want. I want the high yield, I want a fair valuation, and I want a high growth rate. This is the cream of the crop when it comes to dividend growth stocks, in my opinion. And why people aren't talking about this stock, I have no idea. One of the things that I really love about Omega Healthcare is they focus on skilled nursing facilities. This is an essential need as human beings. As long as there are human beings here on this earth, there will be a need for skilled nursing facilities. And this is what I love as a long-term investor. Investing into healthcare is not across the board all the same. Not every investment yields the same return. Skilled nursing facilities, it yields the highest annual rate of return in the healthcare sector as a whole. This is the most profitable sector to be in when it comes to healthcare. I mentioned earlier in the video that they're primarily focused on skilled nursing facilities. In fact, 78% of their portfolio is in skilled nursing facilities and 22% is on senior housing. I think this map depicts a lot better how well diversified this company truly is. They're not just in one city, they're not just in one state, they are spread out across the entire United States. And as mentioned, I just love the fact that they're so focused on Florida. Omega Healthcare is very conservative when it comes to their lease terms. They have an average lease term of 9 years, with 95% of their portfolio expiring after 2023. So this is very conservative, and it should be very comforting for investors when looking into the future. This slide is why I am so bullish and so excited about Omega Healthcare. This slide is really just economics 101, supply and demand. In 2020, you see that there's more supply than demand. In 2025, you see that there's still more supply than demand. But then in 2030, once you see the aging baby boomer population, you will see that there is more demand than there is in supply. And that trend will only continue and is projected all the way to 2040. So how does Omega Healthcare compare to investing in the S&P 500? As we know, Omega Healthcare has been around since the 1990s, and if you were to invest in the S&P 500 versus Omega Healthcare, it really depends on when you would have started that investment. If you would have invested in the 90s, it would look very different than if you were to invest in the early 2000s, mid 2000s, 2010. And so I played with the numbers, and in either direction, it skewed it towards, okay, SPY was up 1 year, then Omega Healthcare was up 1 year. And I didn't really feel that that was really representative because there were so many things going on. In the early 2000s, you had the dot-com bubble. In the late, in 2008, 2009, you had the financial crisis, the real estate crisis, the housing crisis. And so I thought that in 2005, not a lot was going on in the economy. Things were good both for innovation and tech, but as also for the real estate market. And so by looking at 2005, I think it's a little bit more representative of historical results and historical performance. We all know that historical performance is no guarantee of future performance, but I think this is a good indicator to benchmark the performance of the S&P 500 and Omega Healthcare. If you would have invested $10,000 in 2005 into the S&P 500, you would have seen an annual return of 10% year over year. Now, if we would have invested into Omega Healthcare with the exact same parameters, we would have seen an annual rate of return of just under 15%. In this scenario, Omega Healthcare actually outperformed the broader market. Now, this is really important to understand that depending on when you run these numbers, if you ran it from the 90s, the early 2000s, 2011, 2008, you're going to get skewed numbers. I think it's important to understand if you're comparing an investment against the S&P 500, it's important to understand and not just look at it as a blanket statement. If it can't just beat the S&P 500, why invest into it? Well, I think it's a little bit more than just that. I think it also depends on the time frame that you're looking at and also your goals, what you're trying to do. If you're trying to invest for cash flow, it's very different than investing just purely for capital appreciation. So everybody out there that is watching the video, you can invest into Omega Healthcare with confidence and know that you're getting comparable market returns as if you were to invest just into an ETF that follows the S&P 500 index. I love investing into businesses where it just makes sense. Omega Healthcare is a wonderful business. They've increased their dividend for over the last 17 years. They pay a current starting yield of over 7%. For me, this is just a no-brainer. This is a company that I could feel comfortable holding in my portfolio forever. And it's just crazy to me that nobody talks about this company. I think it is so incredible. There are so many dividend investors that are not even familiar with this company. A lot of new investors just do their research on Seeking Alpha or these other websites, which are portraying the dividend numbers incorrectly on their website. This is a company that is not truly being represented on these other websites, and in my opinion, it's a hidden gem. Thank you so much, everybody, for watching. I hope that the video taught you something new, and I'll catch everybody in the next video.
You know what? I think we're gonna be friends. Can everyone say hi to my friend? That's crazy. I just wanted to say thanks. I'm glad you came along, partner.